a slew of economic data out from the region this week. I have with me Leon Perera to discuss what this means. He is the CEO at Spire Research and Consulting. Now, Leon, China ran its first trade deficit of 880 million in 6 years. What are some of the main reasons for this?
Well, clearly this shows some weakness in the export markets, so that's less than expected export performance, and that points to some weaknesses in the global economy. However, we would not read too much into this in Spire. It is not unknown for 1 month or 2 months to actually move into a trade deficit in the early part of the year. Typically, manufacturers stockpile on inventory and imports tend to surge, and that's gone up a little bit higher this particular month. So we wouldn't read too much into this. I think it's really a one-off, 1 month development, but it does point to a weakening or a narrowing trade surplus for the whole year as we move forward for China.
Well, let's talk about China's growth outlook then. We had some positive inflation data out just yesterday, and this might go some way to help China achieve stabilizing growth. What then would be your forecast for its first quarter GDP that's going to be out next Monday?
We'd expect 8% real GDP growth for the first quarter. No doubt exports are going to be a little bit of a drag, as we can see from these latest numbers, due to some weaknesses in the global economy. But we have a new and from the performance on the inflation, I think a strong and effective leadership in place. Now that that leadership transition is more or less complete, with the state officers and the party officers having changed hands, I think the government will continue to play a strong role calibrating bank loan growth and calibrating infrastructure spending to bring up the growth and compensate for export slowdowns.
Well, let's move over to South Korea then. I mean, tensions on the Korean Peninsula are still escalating. So how might a potential war impact South Korea's economy?
Well, first of all, we do not see a war as being imminent. In Spire, we think the probability of a nuclear conflict is really about as close to zero as you can get. If there is any conflict, it will be conventional, will be extremely short-lived, and even that is extremely unlikely. Satellite imagery shows that the North Koreans are not moving troops up to the border and so on. This has been made quite clear, I think, by the US and the South Korean government. So the market does buy this story that it's very, very unlikely for any disaster to happen. Stock prices are the main thing that's going to be affected. Short-term indicators like stock prices, they went down, but yesterday they started inching up again, and that really shows that the market is not buying this apocalyptic scenario story.
Well, there are fears that the declining yen will also affect Korean exports as well as the won. So in your opinion, which sectors are going to be the hardest hit?
Well, unfortunately, Korea does compete head-on with Japan. The biggest sector that will be impacted is automotive. Japan exports vehicles and also parts such as engines out of Japan, and that will become more competitive with the yen depreciation that we have seen. The second sector is machinery and industrial engineering. So the export of machinery and the export of engineers for EPC projects and construction of industrial facility projects is going to get more competitive. And the third sector that will be affected less, I think, than the other two is ICT. I say less because Japanese vendors are manufacturing a great deal now in China. They're assembling products or even sourcing parts in China, but some components, particularly semiconductors, are still made in Japan. So Japanese vendors will benefit somewhat in the ICT field.
Thank you, Leon. And that was Leon Perera, CEO at Spire Research and Consulting.